Hello, it's Rhonda Thomas, and we're just about to do Financial Accounting's Chapter 4, the dreaded 4A problem. It's a little long, but it does a very good job with showing you steps 7, 8, 9, 10 in the accounting cycle. So let's go ahead and get after it. Okay, I have the problem open on the left. Get everything closed up here where we need it to be. And then, okay, start assignment now. We're going to go to 4A without the number 6, 4A. Then you'll have another one to do with different numbers. Okay, but this one we're doing the same numbers. So we're going to go through steps 7. So we're starting with we're starting before step 7. Let's go look at the instructions. Okay, the instructions, maybe. Instructions, chart of accounts, labels, and the worksheet. So, okay, we are starting with an adjusted trial balance. Okay, an adjusted trial balance, unadjusted trial balance. So what has happened up to now is steps 1, 2, and 3, because 3 is your unadjusted trial balance. Okay, 4 is gathering the data for your adjustments. 5 is using this spreadsheet, which I'll show you a copy of that here in a minute. But what I want to do is I've made a copy of this unadjusted trial balance right here in my spreadsheet. Here's where I want you to go. Okay, take out your chart of accounts, take out your labels, take out your worksheet, go to your general ledger. Okay, all you want is your unadjusted trial balance and your ledger. Okay, we need to put balances in the ledger, and you must do this first. Okay, because it'll help for when it's time to start posting our journal entries. So with the balances on the right, or on my right, and let's go to the ledger. So let's start with cash. Notice we have 16 different accounts. 16 accounts, and we have more than that because we're going to use a few extras when we do adjustments. But let's go to cash. Okay, and let's just put the balance that we see here. Here's how you do it. This is going to be March 31st for all these balances. Okay, we're not going to put a balance in any account that isn't on this unadjusted trial balance. Don't put a debit in, don't put a credit in, just put the amount that it would have the balance. So for example, $12,000 as a debit in cash, close it. Go to supplies. Okay, supplies has 30,000 in it. Put March 31st. Put, it's a check mark here. Sorry about that. I'll go back to get cash here in a minute. The check mark is to show that that's the balance. I'd like to put balance. They don't like it. Okay, so let me just see. I don't think they like it. And let me see what they do here. If they care if we put balance there. Okay, nope, that's what they want. So let me put balance there too. And then I need to put the check mark here. So let me put balance. Okay, now let's see if we get a check mark there. Yes. So we do need the word balance. Yep. All right, and we need to get the check mark there. And the balance in supplies is 30,000. Now, if you double click, all of these will open at the same time. And I think that's okay because you're just putting balances in. When you're in your posting, I would close each account just to be safe. All right, we need a balance in prepaid insurance of 3,600. Okay. Then we need a balance in equipment of 110,000. And then accumulated depreciation has a balance with a check mark. And this is going to be a credit balance, so be careful. Okay, the next one is the trucks. March 31st, balance. And trucks are 60,000 with its accumulated depreciation to go with it. And it gets a credit, 15,000. All right, so far, accounts payable. Yep, it's next. Balance. But it's a credit. Common stock, wages payable. Now, wages payable is not on here, so it does not get a balance. Okay, notice there's no check mark there. It's going to get an entry that causes a balance, but right now, wages payable doesn't have anything in it. So if you want to close it, well, that closes all of them. All right, let's just go to common stock then. March 31st, balance. It has a credit balance of 26,000. Retained earnings. Okay, it starts off with an unadjusted trial balance of 70,000. And dividend has a balance. It has a debit balance of 15,000. Okay. Service revenue has a balance. $160,000. Wages expense has 45,000. Supplies expense is not on there. Okay. Rent expense is, so supplies expense is just going to exist for an adjustment and then to close it. Okay, rent expense has a balance, doesn't get adjusted, but it will be closed. Okay, rent expense, $10,600, close it. Truck expense, yes, $9,000. Then the last is miscellaneous, so you can skip these three. All right, we're just putting in the unadjusted trial balance. And they did not do this for us, so we have to do it. Okay, so we want 4,800. Now I want to make sure I got my check mark in cash. Yes, I did. So let's just look at them all real quick. Just open them all. Oh, if you grade it, it'll open them all. Okay, or if you check your work. All right, so let's make sure we've got dates and all the ones we have over here and the right balances and the little check post reference. Okay, and this is posting it from basically this unadjusted trial balance. We're making sure it gets posted in here. This would already have this. Okay, if if you were really running these books, these balances would actually come out onto this. Okay, yeah. So let's just scroll down and make sure that I put things, see, right there. One too many zeros. It never hurts to look again. Let's see if I got it this time. Yep, okay. And haha, I knew I probably put a debit in the wrong spot. Once again, if we catch an error, it's really not an error. Okay? So when you're finished putting everything in that you need to, you'll get about 53.23 points. Okay, so now we are going to look at the spreadsheet that I have created. Okay, so this is called the worksheet. And we'll get the chart of accounts. And it says to do a worksheet. The worksheet, and I've made you one. Okay, I've made you one. They don't really have anything in place of it. Okay, so let's just close it then because we've got one that I've made. So close it up. Here is where you go get this spreadsheet. Go to Canvas, go to Modules, scroll down to Chapter 4, and it's right here, End of Period Spreadsheet, Problem 4-4A. Go ahead and open that up. I've already got a copy of it open. Okay, so let me show you what it does. All right, so it'll ask, when you open it, make sure you have Excel on your laptop or whatever you're working on. When you open this, it might say enable to edit, right? So you'll have to click that. And you'll have to click on enable edit. All right, so let's just look what we have here on this spreadsheet. First of all, here are all of our accounts that we're going to use. So if you looked at the ledger, and there's the account numbers too. If you look at the ledger, those are all of them, plus the ones that had 0 in it. So we had 16 balances, I think. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. There's the 16 for the unadjusted trial balance, and there's how they balance. Now we're going to walk through some adjustments, okay? And we're going to put in the adjustments here in a minute. So let me show you my other spreadsheet. Okay, so we're finished with this adjusted trial balance part here. So let me move this over and get it hopefully out of the way. And we need this, okay, because this is going to tell us what our adjustments need to be. And we're going to look at them in a T account. Remember, we're still using T account to evaluate our transactions. And I'm going to have to make this bigger just to get it over. Okay, hang on a minute. Let me put this over here to the side. And this one. Actually, I'm going to put that up here. Okay, because I've got the T accounts ready, my T accounts, to evaluate or analyze what we're going to debit and what we're going to credit. Okay, so let me go back to the problem. Here we are. Okay, so what we're going to do is we're going to evaluate it, and then we're going to go put it in the general journal, and then we're going to post each one after we're done putting it in the journal. I don't care what the directions say. And once again, we've already been in the general ledger to put in those balances, those unadjusted trial balances. Okay, I think we can get rid of the instructions. Keep your chart of accounts open. So for your journal entries when you need to. So here we go. We have 1, 2, 3, 4, 5 adjustments to take care of. Remember, adjustments update an income statement account and a balance sheet account. Either on the income statement side, it's either making a revenue go up or an expense go up. On the balance sheet side, it's either making an asset go up or down, or a liability go up or down. So now you want your journal. Okay, notice our journal has page 26 and page 27. Page 26 is for adjusting entries that we're getting ready to do. So the first one is supplies on hand at March 31st are $7,500. So here's that supply asset account. Notice it has a balance of 30,000, but they went out and counted them, and the amount on hand is only 7,500. So the amount that causes 30,000 to reduce to 7,500 is a credit of $22,500. If you're going to credit something, you have to debit something else. So when you look at supplies, I want your brain to think of the supplies asset account and the supplies expense account. So let's put this first entry in. All of these entries will be March 31st. Okay, so we're going to put supplies expense. We're going to do this just like we did our other problem where we were using the ledger. Okay, we'll come back and put our post entry in once we've posted to the ledger. So we're looking at $22,500 and $22,500 again. So this is supplies, $22,500. Yep. Okay. Now let's post. Let's go to supplies expense. And I want to close all of these. Okay, let's go to supplies expense. Let's do the debits and then the credits. Okay, this one didn't have a balance in it, so March 31st is the adjusting entry. I don't think they want us to put adjusting. Adjustment, no, okay. All right, let's just put post references from page 26 of the general journal, page 26. Okay, and then we close that account and go to supplies. That has 30,000 in it. Now let's do an adjustment to this one. Okay, from page 26, we're going to credit this 22,500. So the new balance should be $7,500. Close it. Return to the journal. Put March 31st. March 31st. Okay, the next one says insurance premiums it expired during the year are $1,800. So when you have insurance premiums expire, that means that you're expensing them or they've been used. So we had 3,600 in prepaid insurance. So the amount that expired is the amount that's going out. The amount we still have unexpired is 1,800. I want to make sure I'm reading that. Insurance premiums expired during the year are, so if they're expired, they should be going out of this account. If they're unexpired, they should be down here. Sometimes they give you one or the other. Either way, it's $1,800 as a credit and $1,800 as a debit insurance expense. Anytime you see insurance, you need to think of these two accounts. This should be prepaid insurance. Let's get ready to put this in. So insurance expense. I think it'll fix it for you. That's kind of nice. Oh, I forgot to put the post reference of the very first adjusting entry that we did. So it turns out that supplies expense. Okay, hang on just a second. I'll tell you what it is. Supplies expense will start with a 5. Okay, supplies expense will start with a 5. And supplies will start with a 1, because 1 is an expense and the other is an asset. Okay, but I will be glad to read you the numbers from my book here. All right. So supplies expense is okay, and it's in the instructions actually. It says supplies expense is 52. You say instructions, supplies expense, yes. You go to the instructions, it says to use, wait, Well, your number 3 is different than mine. Well, they're the instructions. I want to see okay. Here's your chart of account. Sorry about that. Let's get rid of the instructions. Sorry, I was actually on the instructions. They actually do give the numbers of those accounts. You don't get your chart of accounts uh, when you're looking at the book. You get this. So here it is. Supplies expense 52 and prepaid insurance is 14. So we need to put those in to indicate that we have indeed posted those. All right, back to our second adjusting entry, which is right here, 1,800 is a debit to insurance expense and prepaid insurance. It's the credit. 1,800. Now let's post. Let's go ahead and put the next date in anyway. Let's post the insurance expense, a debit of $1,800. I think this is the first entry in here, March 31st. I wish they would let us put adjusting because I think you should, but it just won't. It doesn't like you to do that. Page 26, it's $1,800 and the new balance is $1,800. Close it. Go to prepaid insurance, which is an asset. We are going to put in this adjustment, March 31st. It already has the balance. Okay. Coming from page 26, it's going down. So it's getting a credit. So now it has 1,800 left in that account. Close it. Now let's go back up and put the numbers in for insurance expense. Insurance expense is 57 and 14. 57 and 14. So 57. Now wait a minute. Supplies is 13. So I messed that up. So that would be wrong. Okay. All right. Let's move on. The third one says depreciation of equipment during the year is $83.50. So we got two depreciation adjusting entries to make, one for equipment, one for trucks. And we don't have to figure anything out. We just put in the amount they tell us. But that accumulated depreciation already has something in it. So let's put depreciation expense, equipment, okay, and depreciation expense for equipment is $83.50. Then we want accumulated depreciation for equipment. Don't pull the wrong accumulated depreciation because it won't work. Okay, we want $83.50. Let's go post. Depreciation expense, equipment, March 31st. Coming from page 26, 83.50, and it has a new balance now of 83.50. Close it. Make sure you go to accumulated depreciation equipment. Already has a balance. We're going to add to it from page 26. It goes in as a credit of 83.50. So now we have a new balance in our accumulated depreciation of $33,350. Let's go ahead and put that in. Close it and back up and here's our account numbers also. Yep, that's good. Okay, so we want accumulated depreciation trucks 19 and 56. And in case we didn't get the other one, it's 55 and 17. So I think I gotta put that in. Oh, this one is this one. Okay, so we want depreciation equipment. Okay, so depreciation expense equipment number 55. Where we put that, let's just double check that's where I put it. Yes. Okay. And then accumulated depreciation equipment. Yes. So this is category. Let's put in next one, March 31st. Okay. The fourth entry is depreciation for the truck. So 6,200 gets debited to depreciation expense trucks. 6,200 gets credited to add to accumulated depreciation. Okay, so we'll put this in. This is 6,200. And then accumulated depreciation trucks. Let's go down to the ledger and pick depreciation expense trucks. Open it up, put March 31st, page 26. Okay, and 6,200. 6,200. Close it. Go to accumulated depreciation trucks. Okay, we've been thrown out of Zoom again. So we're gonna just keep going, no matter how many videos it takes. I can't seem to get it to quit crashing. So let me go ahead. Oh, I'm still recording. Okay, that's good. That's good. I'm not sure, but it quit sharing on me. So let me go back to share. Okay. All right, back where we were. Okay, at least it didn't quit recording. So that's something better. All right, we were putting in our postings from our adjusting entries. Accumulated depreciation trucks with 6,200. Another reason why it's good to have this in a work paper, so that if you do lose your plates, that it won't be so hard to figure it out. The last one is what they call an accrued expense. We're going to accrue the wages but not pay them. So March 31st is our last entry, and we made 5 that affected 10 accounts. So we want wages expense. I forgot to put the post in, $600, and wages payable, $600. Okay, so I'll go back and put depreciation expense for the trucks is 56 and 19. Okay, let's put those in to indicate that we've posted. Now let's post the wages expense, $600. There's a balance already. We're going to add to it from page 26 a debit of $600, $45,600. And then we want wages payable. It's the credit of March 31st, page 26. We are going to put a credit in of 600, and it didn't have a balance. So we close it, and now we post. For wages payable is 22, and wages expense is 51. So we want 51 on the first line and 22. Let's check our work and see where we're at here. Okay, all transactions on this page must be entered. Now we haven't done page 27 yet. So that's why we're not showing all of our points. Okay, but we've done more to our ledger now. Now I want to bring in that spreadsheet. Okay, I want to bring in the spreadsheet. So we are going to show those adjustments that we just made in here. Now you can do this first if you want to. But once again, we had 5 adjustments. We had supplies going down for 22,500. Here is the new balance. So these over here are the numbers you must use to create your financial statements. Okay, it needs to be these. If you use any others, it won't work. Okay, so let's just watch these real quick once again. Down went supplies, and we expensed it in supplies expense. And then down went prepaid insurance for the amount that expired. So we put that in an insurance expense. And then we recorded depreciation for the equipment as a debit. And then the credit to accumulated depreciation, a debit to depreciation expense for trucks, a credit to accumulated depreciation for trucks. And then we accrued the expense of wages of $600 in this period of time that we're working on. And then the offset goes in the wages payable. So those are all your adjustments. Now here is what your adjusting balance should be, right? So if you wanted to look at this compared to your ledger, it would be a good idea. Okay, so it would be a very good idea. And I'll see if I can't bring this over here so we can look at it better. Yeah. So we're looking at this. Let's just double check. Yeah, I've got something going on here. I put that in the wrong row. So let me fix that. And then I needed to add it. Okay, so, let's just go through these. So cash is 1,200. New supplies balance is 7,500. New prepaid insurance balance is 1,800. 110,000 did not change. The accumulated depreciation now has 33,350, 60,000, 15,000. The new balance should be 21,200. So this helped me with figuring that out. And we can check it again now, but I had put it on the wrong line. Okay, so, right, let's keep going. We're looking at accounts payable 4,600 in wages payable, 26,000 in common stock, 70,000 in retained earnings, 15,000 in dividends, 160,000 in service revenue, 45,600 in wages expense, supplies expense. I forgot to put that in there. See, this is worth doing. 22,500. Let me make sure that I got that going down in supplies. I think so. Yes. So once again, it never hurts to go back and look again. So 22,500. Now let's check it. This should go here too. There we go. Let's try this again. All right, that's good. So it needed to go in as a debit because this is an adjusting entry, even though they didn't let us put adjusting entry. All right, let's keep going. 10,600 is rent expense. 9,000 is truck expense. 8,350 is depreciation expense equipment. 6,200 is depreciation expense trucks. Insurance expense is 1,800. 4,800 is in miscellaneous. So this in a end of period spreadsheet helps us stay on track with what we're doing. Okay, now we're going to get ready to put together financial statements. So you don't need this ledger anymore. So for now, okay, we don't need journal right now. We're going to use this adjusted trial balance. So you'll want your labels. Let's go ahead and put in the adjusted trial balance. So they went ahead and put our account in for us. That's nice. All we have to do is make this one look like this one. Okay, so let's put the things in. Okay, you're going to have to put in these amounts. So when this will already be keyed in for you. The only thing you'll need to put in are your adjustments, where they go, and then I've got formulas that are in place to make the new adjusted balance. And then here is the income statement accounts from the service revenue down, and the balance sheet accounts basically are cash down to service revenue. All right, so we're just rekeying what we see beside us. Okay. And then accumulated depreciation. Remember, this is the new balance, the new adjusted balance after the adjustments have been posted. Accounts payable, wages payable, common stock, retained earnings, dividends goes back across. Whoops, one too many zeros. Service revenue, wages expense, supplies expense, rent expense. Truck expense, depreciation expense, equipment. And we've already got our balances down here. 315,150. 350. Kicked me out again, but it is still recording. So back to share. We're just going to keep going. Kicked me out again. Not kicked me out again, but kicked me out again. That ticked me. That's funny. Poor captions. Okay. All right, we're finished with our adjusted trial balance. This is step number 7. Step number 7. Now we're ready for step number 8. Go get your, let's close the adjusted trial balance. Go get your income statement. Close your adjusted trial balance. Okay, so here's your income statement right here. Okay, so here's what you're going to be putting in as your service revenue. These are all your expenses. Here is how much your revenues are. Here's your expenses. Here's what your net income should be when you're finished. So for an income statement, we want for the year ended March 31st. Okay, and we're going to put service revenue. Okay, and it is 160,000. Then we want expenses. Okay, let's go with wages expense. Wages expense has 45,600. Supplies expense 22,500. Rent expense 10,600. Truck expense depreciation expense, equipment the nice thing about looking at the spreadsheet is you can spell your account titles. All right, depreciation expense truck. Oh, that's not it. I'm sorry. I think it's repairs expense. Nope. Nope. Depreciation expense trucks. There we go. Insurance expense. $1,800. Miscellaneous expense. $4,800. Now we need a total expenses. Okay, so this spreadsheet will be very helpful. Here is your total expenses right here. 108, 850. Now we have net income. Well, our spreadsheet already tells us what net income is because it doesn't balance without it. So 51,150 is the net income. Let's see. Okay, so we've got it all. We've got 24 out of 24. Okay, now we're going to remember that net income. And now we're going to do a statement of stockholders' equity. Okay, so I am going to close the income statement and open up statement of stockholders' equity. It's going to need the same label where the year ended. Put it in. We need a beginning balance and an ending balance for equity accounts when we do this. So we have the beginning balance March 1st. I'm sorry, April 1st. So the beginning of the year, and the end of the year is March 31st. So yeah, so this is a fiscal year. Does not follow the calendar year. Okay, now be careful. The amount of common stock is 26,000. Put 26,000 down here. Whatever this is includes any additional. We may have to back it out to find the beginning balance, but retained earnings is up here. So it is 70,000. Now let's see what it says. Additional common stock of 6,000 was issued. So usually if there's any issue, it's the first event that happened. So let's go up here and find issued common stock. And we're going to put 26,000 here. Now, what would have been the beginning balance in common stock? It would have been 20,000. Yep. So then we're going to add across. Okay, I think I've got this. Now, I can't do a spreadsheet really great, but I'll try. Okay, all right, so here is retained earnings. All right, the next one's going to be net income. And all we got to do is look, there it is, 51,150. It gets added to retained earnings. And we also need to add 6,000, and now dividends. Dividends subtracts from retained earnings, and dividends are 15,000, and it's going to show a subtraction over here. And then we're going to add down for retained earnings. I've got retained earnings at 106,150, and then all together our total equity is 132,150. Let's check our work. See if we got 18 out of 18. Yes, now it's these totals that go to the balance sheet. So let's go get the balance sheet. And we can leave them there until we put them in, and then we can close it. All right, so then the balance sheet, and we just want 1 day in time for it. And we're going to the bottom. Let's go to stockholders' equity. Let's go ahead and put common stock. And common stock, if you look, is 26,000. Retained earnings. Okay, and let's look at what retained earnings ended up being. 106,150. $106,150. Okay, now they want total stockholders' equity. And that turned out to be 132,150. Okay, so putting that in immediately helps a lot. Okay, we're going to go get rid of the stockholders' equity because we're finished with that. And then we need total liabilities and stockholders' equity at the bottom. It's okay to put labels in. That way you know what you're going to come up with. All right. So the label for liabilities is going to be current liabilities. Current means what you plan to pay within the year. Okay, current. We have two. We have accounts payable. And you can look it up over here. Now we're doing the balance sheet. I'm going to go out just a little bit. No, this one's over there. Okay, hold on. Balance sheet. Okay, the balance sheet is over here. Okay, so we need 21,200 and no, sorry, we need 4,600. 4,600 is our two liabilities. 4,600, and this is wages payable. Okay, then we're going to get a total liabilities. We don't have any long-term liabilities. So 4,600. So when you add 4,600 to 132,150, you're going to get, see, I've got some notes here, 136,750. That's half of your balance sheet. If it's right, then the other half goes here. So total assets, we'll just put it in there. Okay, now let's go to the top. We'll put current assets here as a label. And we want property, plant, and equipment. Okay, so our first asset is always cash. Okay, so let me move this over. We can see this better. There's balance sheet. Okay, with our first asset list, it's $12,000. Okay, then supplies has 7,500 in it. Prepaid insurance. I think that's it. Okay, so then we have our total current assets. And I have those added up here. Good. Okay, so what we can do is just scroll down right here and hover. That's $21,300. 21. So if you just highlight the cells, you can get down here 21,300. That's pretty slick. 21,300.